Hello everybody. So this is the last video on HIMS for at least a few days now. I wanted to complete my discussion of the call yesterday. I didn't discuss the ED transition and I felt like it was important to discuss, and I also want to discuss the Oscar rumors. If you follow the channel for MicroStrategy, don't you worry, another video is coming. I am working on it. But HIMS today, so we celebrate today HIMS because, it's back at $50. Well, it was at $50 in the afternoon. Now I guess we're at like $49.60 or something. We're essentially at $50, and this is a good thing to celebrate. I'm very happy. Volatility is vitality, even for HIMS. This is the same for Bitcoin. HIMS is one of these stocks that the market has no idea how to value just yet. And it joins a list of stock, a short list of stock that are very, very volatile because the market has no idea how to value them. Palantir, we saw that yesterday, barely down, if you ask me, for Palantir. I was quite impressed by the resiliency of this stock. SMCI, we find out probably as I speak what's going to happen with that one because they have their call tonight, their earnings call. But the main distinction, of course, of HIMS against all of these companies is that it is highly undervalued. Still today, still right now as I speak, still with a 20% growth in the stock price today. It is still highly undervalued, trading at a 0.12 if you're on my spreadsheet. SMCI is even more expensive than that. Health is more expensive than that. Hood is in the 0.4, 0.5. So many stocks are more expensive than HIMS. In fact, most of them are more expensive than HIMS. And I want to point out, of course, that this type of stocks, which are slowly becoming market darlings, they have been noticed by a lot of companies. I think this is Defiance. This is one of the companies, and you can see they issued a 2x long HIMS ETF. Be very careful with those. This is to be held over a day, no more than a day, right? But if you look, they know where the money is at. They know where the interest is at. That is why we see ETFs on HIMS, on Rocket Lab, on Hood, on SMCI. All of these ETF exists for a reason. And MicroStrategy and Tesla, of course, they exist because they're here to harness the volatility. And oh boy, is HIMS volatile, right? We crossed the 70 mark, was it 3 months ago? And now we're at 50. And how quick are we gonna break that 70 mark again? I don't know. I have no idea. Why do I have no idea? Because to me, the options game, while it is fun, it is still playing with fire. It's fun to make some change here and there, but the options game on a stock like HIMS, where the volatility is actually a sign of business vitality, I think is playing with fire, as many of you have commented in my prior videos how they played with fire with covered calls on HIMS. And to me, this is playing with fire. And believe me, this is speaking from the wisdom of being nearly a 10x on HIMS. Now, I started covering this stock when it was trading around $6. So anyways, I have to tell you that I am betting on the common. My bet is on the common stock, and that's my bet on the common stock. That's at least for another 10x on top of the first 10x. And I think this stock could get much, much, much bigger. And of course, I provided a 32-minute video trying to go as fast as I could on the new nuggets that were released in Q1, the new nuggets of HIMS. If you haven't watched it, please watch it, because this video is going to cover something I didn't cover in that video. So yesterday's video had almost all of my takes. One of the takes that I forgot to talk about is the ED transition. I've been thinking about that quite a bit today. So it's very interesting. They mentioned that a few times on the call. So ED, right, erectile dysfunction. That's the very earliest business of HIMS. It was that and hair loss, right? Hair loss and ED got HIMS started, and it's the legacy business. It's the early days business. It is the first vertical that Wall Street used to laugh at when this company got started. Now Wall Street is laughing at GLP-1 and saying that Eli Lilly is much better because Eli Lilly charges, 1,500 and they make more money. So now Wall Street laughs at GLP-1s. Back in the day, Wall Streets were laughing at ED, saying, why wouldn't you just go to the pharmacy? Why don't you ask your doctor to prescribe you it? And of course, Hims came out with a lot of innovation in the space. Well, taking a Viagra pill, taking the blue pill has a lot of stigma, but taking a Hims mint chewable doesn't have any stigma at all. It fits in your pocket. It's a mint. It's stealth. It makes the customer feel good. But Hims seems to be slightly pivoting away from selling consumables, selling one-time pills. And so what that means is that they are not pushing sildenafil as hard, and sildenafil is the generic for Viagra, and this fixes ED. Per what I read, it fixes ED in like 60 minutes to a few hours. You take a pill and then you're ready an hour later. And of course, I think the problem with Hims is that they're realizing that a lot of people they go for a Hims platform, they get the consultation with the doctor, they order a few of these a month, 2 months, 3 month supply, and then they leave and they never reorder until like 3 years later when they're emptying the box, when the pill box is empty. I'm guessing that is a typical pattern, and so Hims is trying to transition people away from ordering these chewable pills, or even they're just simple generic for the Viagra, just their generic sildenafil. They're trying to move away people from using the single-use pills to them actually getting a subscription, getting a daily pill. And in fact, if you go on the ED page on Hims, you will see that they have this ad right here: have spontaneous sex again, get started. They write it right here. And it's an overlap, right? It's a pop-up slide. Like it even hides the hard mints. So they don't want to sell the hard mints anymore. It seems to me like they want to sell tadalafil, and tadalafil, of course, is just a it's a fix. It just fixes you without a pill before the act. You are just back to normal with tadalafil. I'm not a doctor, right? No doctor advice, no health advice, but it's a later generation drug that is found to have a lot of benefits that mimic a more natural sexual health process, and this is of course more advantageous for Hims because it makes the customer more sticky. So they are engaging in this transition from one-time pill users to daily pills and daily pill users. So that's a big deal. That's a big deal because the customer becomes more sticky. If you switch a customer from sildenafil to tadalafil, you make the customer much more sticky. And remember, this is the ED is the most legacy cohort for them. It's still the biggest business for them. And how do they get people to switch to a daily pill? How do you get someone to switch from sildenafil to tadalafil, right? Someone who may be happy with just a mint and just having the mint before the act, right? How do you get them to switch? Well, you get them to switch by adding a custom pill, by adding a custom component. You may remember ED plus heart health. And this is of course all due to the fact that if you have ED, typically there's a high correlation with other issues, right? ED rarely shows up on its own. ED is usually correlated with other issues. And so they're addressing multiple issues at once. So they have ED plus heart health, right? They have ED plus hair health. They have ED plus testosterone support. This is probably pretty light. This is not HRT. It will be interesting how we differentiate that from HRT. Namely, HRT will be much more potent than this testosterone support. I haven't looked what it is. Perhaps a vitamin. And then they even have ED with a multivitamin. Like most people take a multivitamin. Why don't you just sprinkle your tadalafil, generic tadalafil, in the multivitamin? They are building these custom pills. This is my view of a future for Hims where you have a comprehensive health profile done to you and one pill a day, and that pill includes everything that you need via compounding. That is the magic of compounding. They have multiple verticals, multiple things For example, let's assume someone has a problem with ED, let's assume someone has a problem with heart health, and let's assume someone also needs to lose weight, right? Very likely that these three things could correlate. You could imagine him doing a ED plus heart health plus metformin all in a single pill or in two smaller pills. You can just imagine a custom medication that treats all of the issues all of the minor ordinary health issues that a customer may have, and you can make this in a customer-centric way where you don't make your customer feel bad, that they need to have a pill pack, that they need to just have a whole bunch of different pills sitting on the nightstand, and all of the stigma associated with traditional medicine or traditional healthcare. HIMSS is attacking this stigma, and I think this makes a lot of sense, that they try to move single-use pills to daily pills, and that is because it is of course a more natural function. It fixes the ED issue permanently, and that's of course the provider's decision. Remember, and this is something also the CEO highlighted on the call. He said, we make no decision. It's the provider who makes the decision. So, I know a lot of doctors watch the channel. If you're a doctor and you tell me, well, there's a lot of indications against tadalafil, I know. If the patient does not qualify for tadalafil, they may just go for sildenafil. So that's the point number one. I appreciate seeing that. Point number two, and this is going to be very quick. I've seen people on X telling me that HIMSS and Oscar are going to partner and that this would be a wonderful thing. I sure hope not. I hope HIMSS will never accept insurance to pay for services. The CEO was very clear about that on the call. He was like, this is the last thing on his list of concerns. And I understand that, because when you accept insurance, it complexifies everything. You may remember a few videos ago, I showed you a Safe Dean interview where they were talking about this Bitcoin company who does health, and they were explaining how up to 40% of the revenue of a brick and mortar mom and pop clinic, up to 40% of that revenue is up in the air when you accept insurance, because insurance companies are very, very good at, having doctors call another doctor. You have a doctor hired by their insurance company who calls the doctor that prescribed the med, and the doctor says, sorry, we're not going to reimburse for that. Or sometimes it's a pharmacist, sometimes it's a nurse. So traditional clinics always have up to 40% of their revenue up in the air. And that is why collections are so huge in the healthcare industry, because you walk into the clinic, they accept your insurance, you give your insurance information, they do the procedure, they do the visit, they do the labs, the clinics does it all. Everybody thinks the insurance is going to cover, and boom, 6 weeks later, surprise, surprise, the insurance only covers half the bill. Right, very, very common in healthcare. This is why HIMSS doesn't even want to take insurance, doesn't even want to take the risk. And when you don't take the risk of insurance, you can go cash pay and you can charge less. This is why the last thing I would like to see is HIMSS to partner with Oscar, which is an insurance company, of course, but it's a special insurance company in the sense that it mostly caters to the ACA, and the ACA with the political, environment, is the ACA going to be as strong in 26 or in 27 or in 2028? You're way too reliant on the government vicissitudes, on the government deciding yes, no. You're way too reliant on the government when you are an insurance company that is on the ACA marketplace, right? Formerly called Obamacare. I guess it was never called Obamacare, but that's how people used to call it. So again, I'm sure Oscar is the best in that industry, but you're still in a sector which in my view is generally uninvestable, in my opinion. This sector is generally uninvestable, and the same is true for lemonade, by the way. I don't like that sector. That sector is just structurally flawed, in my view. The sector of insurance is structurally flawed, and that's why I don't touch these stocks, even though Oscar is so cheap. But if you tell me that Oscar, for example, is going to do subscription reimbursements, so their customers are expected to say, Oscar's customers are expected to say pay out of pocket on HIMSS, and then maybe Oscar reimburses whatever bill they submit from HIMSS, but in that case, I have less of a problem. even if it could be something as silly as Oscar, for example, sending customers to HIMS with a referral link, and then HIMS getting 100% of a cash pay, or maybe, I mean, let's say they have a referral fee. Let's say HIMS were to pay like a 2% or 3% referral fee to Oscar. That would be fine too. But nothing would be worse for me to assume that just HIMS is just gonna provide insured services, as I'm going to call it, insured covered services to the customers of Oscar, because it is against the very ethos of HIMS. The very ethos of HIMS is that you can do it all. You can provide healthcare for the ordinary health verticals. You can provide that for cheaper than most copays for most Americans. Dudum said on the call, most Americans have about a $3,000 copay before their insurance starts paying out even $1. And HIMS believes it can address most ordinary, everyday healthcare concerns for less than $3,000 a year. That is the revolution of HIMS. This is why insurance really, I think in the future, really is going to be used for what the CEO again called catastrophic healthcare. Insurance for catastrophic healthcare, yes. Insurance for ED, why bother when an ED subscription is $49 a month and your deductible is $3,000? Why would a company selling ED prescriptions bother to even take insurance? Right? When they know most people are going to be cash-based system. And the CEO addresses that on the call. We actually are already mostly in a cash-based system, but most people don't realize it. For ordinary, everyday health, the system is already mostly cash pay. But it's just that a lot of people don't realize it or are comfortable thinking that it's their insurance who's going to cover something. Anyways, this was not financial advice, not investment advice. This is only entertainment. I hope you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.